Welcome, everyone, AM1290 listeners, KZSB, right here in Santa Barbara. And today I have a special guest who is going to be talking about the financial implications of the cliff-hanging elections nationally and also of the financial markets in particular. His name is Mr. Tim Tremblay, and he is the leader of the group called the Tremblay Financial. And by the way, it's spelled Tremblay, okay? And if you want to log on to tremblayfinancial.com, and you can explore that while I'm interviewing Mr. Tremblay. Good morning, Tim Tremblay. Great to see you.
Well, good morning. It's a beautiful day here in paradise.
It is a beautiful day, and it's nice to have you back on the show. Tim has been on my show a couple of times over the years. We've known each other, now over 25 years. It's a long time. First of all, let's review the Tremblay Family Financial Services Corporation for those who are living on the far side of the moon and have not heard about it. Just give us a little thumbnail of you've been in business since 1997, I believe. Is that true?
Well, actually, I got in this business in 1983. I started with the major corporations. I was with Prudential Beige, which is now Wells Fargo. I was with Smith Barney, which is now Morgan Stanley in Crittenden. And then after 14 years with the big wirehouses, I decided to open my own independent firm here in Santa Barbara. So that was in 1997. And it was my mom, my wife, another guy and his wife. We had a little office with card tables. We were calling people and telling them about this little business we were getting started. And we've since grown now to an office here on State and La Cumbre of 18 professionals. And we have offices in Westlake and Santa Maria, and we supervise offices in San Jose, Sacramento, and Fort Worth, Texas. So we've grown to be a significant financial services concern here in Santa Barbara. And, we've enjoyed the success that we've had for one reason, that we've always put our clients first. When I was with those big corporations, oftentimes they wanted us to work with their IPO, their mutual fund, their insurance company. It may or may not be the best thing for the client, but it's certainly the best thing for the shareholders. And I wanted to get away from that and really just look at my client and go to the resources that we have to do the very best we can for our client.
Well, it's extraordinary growth. I was not aware of the expansion since the last time we did a program together, but all of the new expansions that you have developed, it's breathtaking. It really is breathtaking. Congratulations. I didn't realize.
And Mark, I got to tell you, we feel blessed here during this pandemic. We've been very busy taking care of our clients' needs. Mm-hmm. And we have a lot of friends and clients that have really had a difficult time during this coronavirus. And we're there for them. But it's real important that we get this thing behind us.
Do you think that your success is related to the fact that you're a family-operated business? Your wife works there and is active there. Also, your son Troy is active. So, is that the main reason? I mean, when you go into your office, it's a family. It's obviously a family business.
Yeah. Well, yeah, there's no question. I mean, again, when we started, my mom was my assistant. She was the first woman to attain personnel officer for the Los Padres National Forest. Uh-huh. She retired at 65, and here she is, this little 5'0" lady, telling these macho men, firefighters, hotshots, where to go and how to get there. And she retired at 65 and came to work with me at Prudential Beige, and she worked with me for 26 years until she was 91.
Wow.
There was a time we had 4 generations here in the office.
That was the last time I was in the office, actually. That you told me that was the last time.
Yeah, absolutely. And we're still missing her. She passed away a couple of months ago, and at the age of 93, she retired here at 91. And when she retired, I said, "You can't retire. I have work for you to do." And she says, "Go to your room." She has been a mainstay and a legacy for Tremblay Financial. But as you mentioned, my son is working here. He's been working here now. Well, he tells people since he was in 3rd grade, he's been working with me.
One of the things that we notice when we visit Tremblay Financial is there's a whole room of sports memorabilia, which now I've heard through the grapevine that KEYT is doing a special broadcast or a special interview with you concerning that room. Can you talk about that a little bit?
Yeah, that's right. It all started with a back-to-back Laker championship. I got a Wheaties box that had all the Lakers on it, back-to-back champs with Magic, Kareem, Worthy, and all those guys. And Barry Liker, a friend of mine who was doing stats for the Lakers, invited me to a game. So I took the box with me. And I went down in the locker room with Barry, and I got Kareem, Magic, Worthy, Michael Thompson, all the guys autographed it. And I put it in a glass case. And that's what started the Tremblay Financial.
That's amazing. I did not hear that story.
Museum.
Yeah, I didn't know that story.
It is very significant. And Mark Patton did a spread in the Santa Barbara News Press, and I think Mike Clan, the sports director for KEYT, got wind of it and said, I'd like to check it out. So he was here on Saturday going through all the different items, and so there should be an interesting presentation for the sports on KEYT here real soon.
Yeah, and the first time that you showed me this memorabilia room, it took us 30 minutes just to go through each of the major items, not even all the items, but just the major items.
That's true.
And it's not just the Lakers, because you have a football background. Let's get into that. And one of the reasons why Tim is so well known and well connected and so trusted as a financial advisor is that he has been very helpful with Westmont College, with Santa Barbara City College, and with UCSB, very active on various athletic committees throughout the decades that he's been here in Santa Barbara. But have a little discussion with us now about the core value that you have as a financial services provider is trust. That's the one thing that I have noticed over the 25 years I've known you, is that people trust Tim Tremblay. How did you build that feeling of trust in your business?
Well, that's the most important asset that we have is our reputation. Mm-hmm. And our goal from day one was always to put our clients' needs first and foremost. We'll have folks that'll come in and say, "Hey, what should we invest in?" And our answer is always, "I don't have an idea until I know who you are financially." An investment that's great for one person could be totally inappropriate for another. Mm-hmm. And so we really take a lot of time and effort to find out who our client is financially, as well as their temperament, goals, objectives, and so on, before we ever begin a financial plan.
Yeah.
And I think using that as our mantra has been the reason that our clients have succeeded, and it's the reason that Tremblay Financial Services for 16 years in a row was voted by our community in the Santa Barbara News Press as the best full service investment firm in town.
And you've deserved it. You've earned it. One of the things that impressed me when I was reviewing your updated website, by the way, congratulations on your updated website. It's a lot different than when I saw it a couple of years ago. But one of the things that I was impressed by was the fact that you clearly state as your mission goal to help people plan their own financial future and help people decide and get to the goals and the ambitions that they want to achieve financially, rather than advising people to invest in, well, not shady things, but risky business. There's risks always. We have risks in financial business, but the way in which you handled it is most impressive, because the emphasis is on the individual accomplishing their goals financially.
Well, that's so true. If you want to make a quick buck in the market, this isn't the place. We are long-term financial planning, financial services firm, where we're going to look at the long-term for our clients. We're going to look at their goals, objectives, and make sure that we're doing the very best that we can to help them achieve those goals.
The
risky things, you can make a lot of money, but you can lose a lot.
I know that from personal experience, and I know that from friends of mine who they jump on Apple stock, for instance, because the rewards would be so great, but then something would happen in the market, and they wouldn't be doing so well.
And Mark, I think that's the key as we look at the going on 24 years now with Tremblay Financial and 36 years in the business. Looking at the tough times that we've been through has really brought a lot of value to the table here at Tremblay Financial Services. I was there in 1987 when we had the market crash. The Dow was at 2,600 and it lost over 500 points on October 19, 1987. That was a huge experience, learning experience for me as a new advisor. And then we saw Milken and Boesky and the junk bond fiasco. We saw the savings and loans basically go away. And it wasn't long after that we went through 9/11 and the meltdown of the dot-coms and Afghanistan, Iraq. If you had 100,000 in the S&P 500 in 2000, 3 years later, you lost half your money. It took 3 years in that downturn. And then, of course, we went to a record high in 2008, and then we had the Great Recession. Yeah. If you had 100,000 in the S&P in 2008, in less than a year, you had 40,000. So having gone through those difficult times has really helped us in the preparation of this triad asset allocation approach that we use that's been very effective in preserving our clients on the downside. We have safe investments that are so important, non-correlated assets that are not in the stock market. And of course, it's important to have a portion in the stock market, but it's designed for our client according to where they are in their lifespan, what their goals and objectives are, what they're trying to accomplish, and we ensure that we're going to have that asset allocation designed for that particular client.
Yeah, I think we're coming up to our first break, but one of the assets I think that you really have is that you are so well respected and trusted here in the community on the Central Coast, and now I understand in other markets as well. So we're going to be taking our first break, but I want to remind people that we'll be discussing the effect of the cliff-hanging election on the markets with Tim, and we'll be discussing what to expect from the future of the markets, if we can possibly prognosticate what that's going to be. And ultimately, we're going to be asking Tim to tell us what the legacy of Tremblay Financial is going to be here. So stay tuned. Stay with us, folks. We're going to take a little bit of a break. I am Mark McIntyre. This is KZSB AM1290. We'll be back right after these messages. And welcome back to Voices of Santa Barbara. I am your host, Mark McIntyre, and my special guest today is a good friend and a pillar of the community. He and his family are very well integrated into the community for many, many years, decades actually. His name is Tim Tremblay. He's the leader of the Tremblay Financial Services company here in Santa Barbara on State Street. If you want to hop on to tremblayfinancial.com while we're having this chat, you can see all the wonderful things that they provide for their so welcome back, Tim. I wanted to have this segment. We have 5 segments on the show. This is our second segment. I wanted to get your view on and share with us your take on how the recent 2020 elections nationally, locally, they're pretty well settled, but nationally, we still have a ways to go before things actually get settled. And there's something I always consult first thing in the morning economically, besides your website, of course. I check yours first of all, but I also switch over to something called First Trust. And they had an article 2 days ago, "No wave is good news for stocks." And I'll just read the first paragraph. While the election is still not certified and court battles will drag on, it appears that we can draw 2 firm conclusions from the 2020 elections. First, the pollsters were horribly wrong again. Secondly, American voters do not want a radical shift in economic policy. What's your take on that, on those 2 points?
Well, first of all, what I tell my clients is unless we get some real hard evidence, it's going to be President Biden.
Yeah.
And so that's what we really need to be planning for moving forward.
Yeah.
And we're seeing the markets doing well. since the election.
Mm.
And part of that is that those on Wall Street believe that Biden is going to be blocked by the Senate. They believe that we're going to see the runoff in Georgia go Republican, and they believe that he's going to be harassed by his own socialists in his party.
Yeah,
it's going to be a difficult time for the Democrats. We've never seen such a divide within the Democratic Party, and so that's going to cause some consternation in getting some of these things done that Biden has said that he wants to do, which is good news for Wall Street. If you start implementing the Green New Deal, the cost and what it's going to do to our economy is just dramatic. And so we don't see that happening at this time. There are other concerns that we have as far as the economy is concerned, the markets, and really the attitude of the American investor. And that has to do with what is going to be the international response. We've heard a lot of rhetoric about China and Russia, and of course, Korea. What's going to happen in that instance with a Biden administration? Where are we going to see taxes go? Without the Senate, we don't see taxes going up dramatically, as Biden has indicated. And this is another really interesting aspect of what's going on in the Democratic Party. Nancy Pelosi is already talking about the 25th Amendment. So they're talking about bringing the vice president in as the president's not able to fulfill his responsibilities. It's almost as if that's part of the plan. Now, if that happens, we'll see dramatic shifts in where the wizards of Wall Street think things are going to go. We don't see that happening here near term, and God willing, it doesn't. But those are some of the big concerns that we have. Well, I'll end with this one concept that I think is very, very important in this regard, Mark. We presently have a debt of 27 trillion. We have a deficit right now of 3 trillion. We have unfunded liabilities of 155 trillion. You can go to usdebtclock.org and take a look at it live. And that's not even something that's been discussed. And those aren't opinions. That's a fact that we need to really look at, those numbers. And President Trump, before the coronavirus, that aircraft carrier was just starting to turn. We were seeing the deficit reduce and heading toward a balanced budget. And then, of course, everything went out of whack with the coronavirus. Yeah. So we have to really address that. It's very, very important. And you're not hearing Biden really discuss that at all.
Yeah, let's loop back on a couple of those things. We're coming up to our second break, actually, but we have about a minute. Let me just make an observation that other people have been making, that it's consistent with what you just said, Tim. And that is this: we seem to be in a curious situation that the election results, the down ballot elections for Senate and for House, the Republicans have picked up seats in the House. They're poised to maintain their control of the Senate. So it appears that the nation has decided, if they did vote for Biden, but they're also voting for Republican members of Congress. So they seem to want Trumpism without Trump. That's what Victor Davis Hansen has dubbed it. They seem
I absolutely agree with you. I agree absolutely.
Yeah.
And look at the polls. Look, they said it was going to be a blue wave. They were so wrong. And even the election was going to be a landslide. Of course, that wasn't the case at all. Yeah. And in fact, it certainly could change. Again, we think the odds of finding real solid evidence that there was collusion in the vote counting and so on, we just don't know. We don't anticipate that. But regardless, you're absolutely right. The sentiment of our country is moving more to the center or even to the right than it is to the radical left.
Yeah, and I think that's
examples of how that fails.
Yeah, that seems to be the obvious choice, and the voters are very, very smart to do that, because it goes to the balance that we try to achieve in our federal electorate. And hopefully all of these court cases can be resolved so that people return their trust to the electoral process. I think that the pollsters have lost completely out, and they're going to have to find a new line of work because now they've been wrong in 2 presidential elections. But we're going to take our second break right now, if we can. And then we're going to come back and we're going to drill down a little further into what Tim has just told us about the expectations of tax increases, the expectations of what the radical progressives can get through the House, how the Senate will react to trade wars, whether or not the peace in the Middle East is going to be extended. All of these things we're going to drill down in terms of how this affects the markets. So please stay with us. I am Mark McIntyre with Tim Tremblay. We'll be right back after these messages. And we're back. Welcome back to Voices of Santa Barbara. My guest today on this beautiful day here in Santa Barbara is Tim Tremblay, and he's the leader of Tremblay Financial Services here in Santa Barbara. You might want to pop over to Tremblay Financial, Tremblay. Okay, that's how it's spelled. I made that mistake quite a few times myself when I first got to know him. So be careful of that. And you can follow along here on the audio portion if you're listening on radio. We will upload this later on after it's finished its broadcast cycle on KZSB. There are 3 more broadcasts on the radio that will take place. Then we'll upload this to the YouTube channel. In any case, Tim, let's go back to some of the things that you mentioned in the last segment. And that would be that, do you see any significant changes in the economics of the country because of the likelihood of a President Biden?
Yes. But it's not going to be as dramatic as it would have been if it was a Democratic Senate. But Biden and his administration have made a lot of promises.
Yeah.
And so they have to at least attempt to accomplish some of those things. Quite frankly, I think it'd be a big mistake for our economy and for a lot of reasons, the welfare of our country. So take down the wall on the border after all the effort that's been put in and the success that we've had makes no sense. Mm-hmm. They're talking now about estate taxes, maybe taking the exclusion from the current 11 million down to 3 million. So that's going to tax the middle America. They inherit their parents' home and their retirement plan. You're already there. Mm-hmm. So that's going to be a concern for a lot of folks. Mm-hmm. We hope that doesn't go through. Mm-hmm. The debt, that's a huge concern. We haven't even heard them discuss anything about how they're going to try to get that turned the other direction. And the best way to do that is to stimulate the economy. Yeah. So then going back to your other question about the stimulus, we really believe that we're going to see the stimulus, probably not the 3 trillion, but certainly not the 1 trillion, probably more in between. Maybe 2 is what a lot of folks are looking at. But $2 trillion to come into our economy is very, very important right now. And it's as Trump and his administration has said, it's not their fault that the virus came in and devastated their businesses. Yeah. And so we need to do what we can as a country to stimulate and get things back to normal.
Yeah, this is a national emergency and it has to be handled as such. It's an attack by the enemy within our own bodies rather than a foreign power. And so it does require federal assistance to stabilize the economy. Interestingly, isn't it fascinating that here, even in California, various propositions were very conservative economically. If you'll remember, as far as I can know, the proposition, I think it was 22? 15, which would have radically changed the whole Proposition 13 economic structure. That was rejected by the voters by a substantial margin, and yet Biden wins the state of California. Salud Cabajal wins the congressional seat, et cetera, et cetera, et cetera. What does this tell you about people, regardless of what party they're in, Democrat, Republican, Libertarian, even Communist. What does this tell you about the fact that people respond to money rather than ideology?
Well, that's absolutely for sure. But the other thing that I think it tells us is that this blue state of California had best be more toward the center than the far left, and that's what they're telling us with some of the results of the election that we've seen. They don't want to see higher taxes on businesses. That's going to flow right down into the middle America.
Right.
Those businesses are going to have to charge more. You're going to have to pay for it in one way or another. And really, the best possible way to really get our economy, our country moving in the right direction is to have a very strong economy. And layering taxes on is going to stifle that economy. It's not going to help. So if you have an economy that's robust and you keep taxes where they are, your tax revenues are actually going to go up. And that's what they need to look at. It's not, higher taxes mean more money in the coffers. It doesn't necessarily mean that.
No.
You have less taxable revenue. It's just not going to help.
Yeah.
So let's get this revenue. Let's get the economy really rolling again, and that's going to help us address each of the needs that we have. And I think that even here in blue California, that a lot of most of the voters realize that.
Yeah, it was President Kennedy, interestingly enough, who was the first president, the first Democrat president, actually, to cut the tax rate, and not a tax hike, but a tax reduction. And that stimulated the economy. All the President Trump has done is to follow along in the next philosophy, that economic philosophy, that you get more revenue into the government coffers if you allow people to build and to expand businesses and to hire people and people starting a company. That's why the stimulus package is so important, because most of it, as I understand it, is going to go to relieving the unemployed and also to help people start businesses, even during this type of a crisis. So there's a lot of consensus in what you just said, Tim. A lot of consensus among economists that that's what we're doing.
Absolutely.
So it looks like the tax hike, even under a Biden administration, is off the table. The Green New Deal, if the Republicans maintain control of the Senate, that will never pass, even if it passes the House, even if President Biden, should there be a President Biden, that's not going to pass. So all of these radical socialist leaning programs that the Biden people want to do have not really much chance of going through, as long as there is a firewall in the Senate and an increase in the conservative Republicans and libertarians that have now won seats in the Congress. So, yeah. So we're coming up.
One thing we are seeing with the AOCs of the world is they want to see more and more of the radical left in the Biden administration. And that's a concern that we might have, and we have to keep an eye on that and see what takes place. But I think if the Democrats are wise, that they'll stay more to the center if they want to get things done, and if we want to see improvement take place in our economy and our country.
Mm-hmm. Yeah, and there's also a school of thought. I'm a subscriber to this school of thought. You'll notice that when Biden was crowned and anointed as president, before all the votes were cast, Republicans, conservatives, and libertarians did not take to the streets rioting and burning down cities and burning down businesses and looting businesses and beating people and killing cops. None of that happened. But I'm concerned that if there's this outside chance that President Trump could actually be reelected because of the vote irregularities, I'm afraid that the Antifa crowd and the extreme left will ignite the country and it will burn. I'm quite concerned about that.
Well, and that's how we see a lot of the businesses have spent millions of dollars boarding up their buildings and trying to prepare for just that.
Yep.
They're hoping that it doesn't take place. certainly, if Biden is elected, you're not going to see Republicans going out and looting and demonstrating like that. You have to accept the vote when push comes to shove at the very end, and move on and do the very best you can. But that is a real detriment, and I think most of the folks in the Democratic Party understand that as well. And I'm hoping that we can also address that in the future and say, that's not the way to change political outlooks. In fact, it's going to make your outlook even more difficult for people to embrace.
But I am happy that President Trump is pursuing all of these litigations to make sure that the people of the United States must have trust in their electoral process. If they don't have trust in their electoral process, then there's no reason for them to participate in the electoral process. So on the positive side, no one talks about this in the mainstream media. They don't talk about the benefit of going through these litigations. They are wringing their hands like some collective Pontius Pilate, saying that this is a lamentable thing that Trump is doing in pursuing this. I disagree with that entirely. I think that he needs to do this for the sake of restoring the trust that people need to have in the electoral process. We know that they're never going to trust pollsters anymore. That's done. That's over. That's gone. Our friend Frank Luntz has even published several articles on that, and he's a conservative pollster. He says he's going to have to find another line of work. That's how desperate it is. Anyway, we're coming up to our next break, and after this break, we're going to drill down in what can you do? What can you do with the advice of Tim Tremblay? What can you do to prepare for what we can expect based upon what we've been talking about in the last three segments of the program? So stay tuned with us. I'm Mark McIntyre with Tim Tremblay right here on KZSB AM1290. We'll be right back. We are live. We're back. Welcome back, folks. I'm with Tim Tremblay, a dear friend from many, many years. He's also a dear friend of most of Santa Barbara and the Central Coast, and now in far off places that I didn't even know about. Congratulations on your expansion, Tim, and thank you for spending some of our time, some of your valuable time. But he is live in his office and coming to us by Zoom right here on KZSB. There will be 3 more broadcasts of this program on the audio version from the radio, and then we will upload the video Zoom version over the weekend. Anyway, Tim, let's dive into a very important area. Given what we have discussed, given the probability of a Biden administration, given the probability that the Republicans will still be a firewall in the Senate, given the fact that even in the House, Nancy Pelosi is fighting for her job and she's facing stiff opposition from the moderates, and that Kevin McCarthy may be able to form an alliance to suppress some of the more radical socialist, Marxist policies that Pelosi and Biden would like to pass. So given all of that, as an investor, what would you advise me to do? How would you advise me to proceed in this climate?
Well, the first thing that I do, of course, is we have an investor, a client that comes in and asks that question. We're going to go through a questionnaire and find out who you are financially. Take a look at your goals. On a scale of 1 to 10, how do you rate safety? On a scale of 1 to 10, how do you rate speculation? Oh. On 1 to 10, how do you rate income, growth, reducing taxes? Are you looking at buying a house, or maybe it's college education plans, or it might be your retirement plan? Each person is going to have different goals, different objectives. And so a portfolio is going to be designed specifically for that client. So early on, I said, folks come in and say, what should I invest in? I say, I don't have a clue until I know a whole lot more about who you are financially. And so with that said, if anyone tells you that they know where this market's going, that's a red flag. There were so many pundits that said, if we don't see a resounding Trump as a second term president, that we're going to see this market really tank. And so there were a lot of folks that prepared for that. They saw the election and they took everything, put it in cash, and the market took off.
Yep.
The same thing happened with President Trump when he won. So, we just don't know. I can tell you that from the decade 2000 to 2010, if you were in the S&P 500 in 2000, at the end of 10 years, you're down 20%. That's the first time we've seen a 10-year run where you're down significantly after 10 years in the S&P 500. And that's the blue chip stocks.
Wow. I didn't know that. Yeah.
So what we need to do is put you in a position where you have safe money, you have non-correlated money that's not in the stock market, that's in investments that make good sense in this economy, and you have a managed account in stocks and bonds. And again, depending on how you answer those questions, that'll tell us the type of stocks that we're going to look at. That'll tell us how much of a portfolio you'll have in the more aggressive positions. It'll tell us how much we have in safe investments that are going to give you that foundation. And so each person, it's going to be a different approach. But with that said, we have to prepare for the unexpected. And I think that's what we're looking at here moving forward. We just don't know really what to expect with this administration. With the Senate, we still have to see what happens with the runoff in Georgia. If that comes into play and they move more to the center, that's going to be a real positive for long-term economic returns for our clients. If the big green deal comes in and the Georgia runoff doesn't go the way we thought, and you start really seeing higher taxes and movement toward this big green deal, that could be really difficult for investors. So there are a number of scenarios right now that we're looking at, and we're not positive what direction this thing's going to go. If I had to bet, I would bet that we're going to have a Republican Senate, and that's going to block a lot of these ideas that Biden had with raising taxes and so on. And he's going to have to deal with the socialists in his own party. So that's going to be a difficult job for him and his administration moving forward. But it could be a positive for the stock market and investors.
Yeah, it seems that your overall general advice is that people should learn how to pivot financially, and how to respond to the market forces. That seems to me what you're recommending. That instead of just dumping all your money into the stock market on sweetheart stocks or bonds or any such thing, you seem to be indicating that we should be ready to pivot based upon an analysis from a professional like yourself as to how to pivot. Well, most of us don't know how to pivot financially.
Well, I remember the late 90s when the dot-coms were so hot, and I was trying to advise my clients, don't put everything you have in these dot-coms.
Yeah.
Some of them don't even, they haven't shown any type of earning potential. They have the name .com and it seemed like everything was going to, if it had a .com, was going to go up. And a lot of those folks just didn't listen to what I had to say, and they came back and said, "I'm glad I didn't listen to you. I'm 3 times my money."
Yeah, yeah.
And of course, we saw the meltdown of the .coms.
Right. And
that's when we really showed the value that we had here at Tremblay Financial in this triad asset allocation that we use. Long-term, a conservative approach doesn't mean that you don't have some aggressive positions in there, but you've got to have protection on the downside, and you've got to have investments that will perform for you whether the market goes up or not.
Yeah, well, that's good advice. And we're up to our last break. We'll be right back after these messages with Tim Tremblay of Tremblay Financial Services. Stay tuned. Thank you very much, ladies and gentlemen, for joining us. We're in our last segment here at KZSB, Voices of Santa Barbara. I am your host, Mark McIntyre. My special guest today is a good friend, a pillar of the community, he and his family, Mr. Tim Tremblay, and they have contributed so much and continue to contribute so much to the economic vitality and the social vitality of especially the athletic programs and the financial programs here. So in this particular segment, what we do is we ask our interviewee what legacy they wish to be remembered for. Not that they're going anywhere soon, but it's something that everyone should think about. We should all think about, how are we going to be perceived in our life's work? So, Tim, take it away. How do you want to be perceived in the whole work of your life?
The one word that I would say as far as my legacy is concerned is family. I met my wife, Marcia, at Santa Barbara City College. She was a cheerleader. I was captain of the football team. First time I asked her out, she said no. I said, "Do you know who I am?" And she goes, "Yes." And Chase was on. I went to Dolores grade school, Bishop Diego High School, Santa Barbara City College, Wake Forest, played football, went to law school. But Santa Barbara is where we wanted to raise our family. And here at Tremblay Financial, I mentioned my mom was with me for 26 years. My wife, Marcia's been by my side for the entire time, the 36 years we've been in this business. My son, Troy, has been with us forever. And now our daughter, Giselle, has joined us. And my grandson, Tyler, is now an advisor here at Tremblay Financial. So we're into our fourth generation here. And I think if we look at a legacy, it's a legacy of our clients and their families. We look at families and their future, what they plan to do with their families today and in the future. Their estate plan is so important. We have to plan for these possible estate taxes and so on. So our legacy is planning for our family and the families of Santa Barbara community.
Well said, well spoken. I think that we are really fortunate to live in such a small community relative to Los Angeles and relative to San Francisco, where family gets lost. It just gets lost. And I'm much encouraged by the fact that the emphasis of your business actually is your family. And I want to thank you for spending some time with us and our audience. And just one last word. I want to pay tribute to your mom. I had the chance to meet her a couple of times. Just a wonderful lady. I remember that she had the corner office in your suite, and always a cheerful lady, a dedicated person. And she also exuded the kind of family structure and family devotion that you and Megan have built together. And I'm glad to see that Tyler has joined the business, and your daughter has joined the business too.
Yeah,
I noticed that Tyler is he's running the blog on your website, right? Is that right? Does he run the blog?
Yeah, and Giselle is running all of the high-tech Zoom and the different seminars, webinars, and things that we're doing.
Right.
So it is family, and I want to say one last thing about my mom. She was my mom, but she was also one of my best friends. To have her by my side those 26
God
years.
love her. God love her in remembrance. And we're going to have to close right now because the news is coming right top up. Thanks a lot, folks. We'll see you next time on Voices of Santa Barbara. Thank you, Tim. Bye-bye.
Take care.
Okay.